there are a lot of people this week that people who are tuned in to what's going on and understand what's happening, and they see what's going on and have freaked out. And it's unlike anything I can really explain when you talk about being motivated by fear and concern. And I think it's justified what's happened. The Federal Reserve and the government has signaled, in my opinion, the end of the US dollar as we know it. And what they have done by bailing out these banks is horrendous. And I think it's the death knell for the dollar. I really do. They have signaled the end of quantitative tightening. They have signaled that they have chosen inflation over the tough decisions. They told us that the taxpayer won't be on the hook for this. That's a bunch of bullshit. They will be on the hook for it, not through taxes, but through inflation and tremendous amounts of it. When they came in and bailed out the banks in 2008, making bailouts illegal after that, calling it bail-ins, where the depositors are general creditors of the bank, those depositors, those companies in Silicon Valley, those startups, they all should have gone bankrupt. That is what the law says. And by doing this, they have signaled that they have given up on trying to stave off inflation. In 2008, when they did this, the Fed's balance sheet was $800 billion. And to get to where we are now, it's $9 trillion. That $8+ trillion that they put on their balance sheet is because they were buying treasuries and mortgage-backed securities, all which suppress interest rates. The suppression of interest rates makes an illusion out of asset prices. If you have interest rates at 0% and you go and try to buy a new Honda Accord, and you can take a 60-month loan and only pay $200 a month or whatever, but then interest rates go to 5%, over double that, and now that cost goes from $200 a month to $600 a month, and doesn't work that way anymore. And so as you have suppressed interest rates, you incentivize debt, you incentivize speculation. You see asset prices go higher in the form of real estate and stocks. You can see corporations borrow money at next to nothing and buy their shares back within the stock market, which jacks up the share price, which gives them super big bonuses, even though that doesn't do anything for the corporation, because the corporation is not reinvesting the proceeds. The way that Austrian economics would tell you to do that is you build a sound foundation through savings, investment, and reinvestment. What these Wall Street companies have been doing is borrowing, not investing, buying their shares. And instead of reinvesting with all the profits they make, it just goes into buying more of their shares in the open market to jack up the price so that they become rich, and it's eviscerating the inside of the company. These types of distortions and misallocations come through suppression of interest rates. And the environment that we have right now is a very frightening one that I think is going to lead ultimately to the destruction of the dollar. And I think it's important first, maybe we talk about how all of this happens. But I mean, it's important to first talk about the fact that I think the government's lost all credibility. First, they tell us there's no inflation. Then they tell us inflation is transitory. And then they say that they'll stop inflation. And then they say, well, it's structural. And then they say it's peaked. And then they said maybe it hasn't. It's reemerged. It's all bullshit. They are scared. And the time to be scared is when they tell us not to worry, that they've got this covered. That's exactly when we need to be concerned. I have been talking on your show and others for weeks about Credit Suisse. Do you hear them talking about it today? Yes, you do. Their share price is $2 a share. Their Saudi backer, who's been adding or providing liquidity to them, said they're out. And you're talking a bank that is a globally systemic, too big to fail bank. And this is a very, very big problem, as a matter of fact, because it's one of these daisy chain banks. How about the November meeting of the FDIC Systemic Resolution Advisory committee who told us this was all going to happen, that there would be bank runs, that there would be bail-ins, that the institutions already know this, but that the people need to know there'll be bail-ins. Well, that was until they changed the rules here at the 12th hour. But that if they tell the public, it will lead to runs on the bank. And we'll talk about what those runs on the bank really mean. But the bottom line is that this has been coming, and we knew it has been coming. And what the Federal Reserve has done, in my opinion, makes the bank deposits more shaky than they were before they changed these rules, because now, even if they do continue to print money out of thin air to liquefy the banks, it creates massive inflation, which just pushes interest rates up more, which just busts the balance sheets of the banks more, which more money to print to bail them out, which push interest rates up more. It's a vicious cycle. All roads lead to the same place. They have not thought this through, but let's talk about what's happened to the banks so people understand and how it works. And it's actually kind of simple, but people need to understand that when you make a deposit at a bank, right, that deposit is not an asset to the bank, it is a liability. And the bank needs to offset those liabilities on their balance sheet with something like a bond, a treasury bond, or a mortgage-backed security. And so they offset that. And the problem is that during COVID, Biden eliminated all the reserve requirements at the banks. So the banks basically had no reserve requirements. And so they've had very, very little currency on hand to meet customer demands. And even if there's a very small bank run, like we saw this weekend, and the banks are forced to sell their bonds at a huge loss, and we'll talk about that in 1 second, to meet the demands of their customers getting their money back, you can see a run on the bank, just like what we saw, because the bonds that these banks have loaded up on over the last several years have been at an average rate of, say, 2%, most of them being short-term treasuries. Until recently, they've been buying the longer maturity things, the mortgage-backed securities and the 10-year treasuries and 30-year treasuries, and loading up on these things, but rates are now at 5%. And so those bonds that they are forced to sell as rates approach 5% have lost over half their value. And so when they are forced to liquidate these bonds, these assets, to meet with the demand for withdrawals, think of Credit Suisse, who had $1 billion in the fourth quarter pulled out in investor deposits. So they need to sell bonds at a massive loss because they've been buying bonds at the lowest interest rates in human history, and filling up their balance sheet with it. And when they have to sell them, they've lost 50% or more of their value, and a bank can become insolvent in 24 hours, and it happened last week. So the FDIC, Slayer, they can't handle this. Their insurance fund only has 0.03% of all bank deposits covered. They have about $125 billion in funding backing over $9.5 trillion in deposits. It's a bunch of bullshit, right? The only way to save the depositors in this case was to monetize the banks, to print currency to make them solvent. And at the same time, it destroyed the value of the dollar. They were left with a decision, because when was the last time you saw the FDIC, the Fed, and the Treasury meet on a Sunday night? Doesn't happen very often. And they were left with the decision: do we save the banks or the dollar? And they've spoken. The dollar is officially dead on arrival as far as I'm considering. And not to mention, the US banks, as of the end of the year, were sitting on $620 billion in unrealized losses, assets that haven't decreased in price yet because they allow the banks to not mark to market these bonds they hold. They allow them to mark them at par on their balance sheet. So if they have a bond paying 2% that they paid $100,000 for, that's now worth $60,000 because interest rates have gone up, decreasing the value of those bonds in circulation. Their balance sheet says 100, it's really worth 60 or 50 or 40. And it's a way of this bullshit accounting that allows them to make their balance sheets look better than they truly are. But instead, in this case, they had to sell this stuff because they had a run on the banks just to come up with the capital, pay everybody back, and they went bankrupt. And the fact that they are now backing all of the banks is the road to Weimar Republic. this money created out of thin air will destroy the value of the dollar. And when you put it into context with all of the stuff I've been talking about for the last 2.5, 3 years about the BRICS nations and all of these countries de-dollarizing and moving away from the dollar, let's talk about the linchpin of it all, Saudi Arabia, right? I ask people, what makes the dollar world reserve? Most people don't know. It is the protection of the Saudi kingdom, and by extension, their willingness through OPEC to value oil in dollars globally. Every country on the planet has had to own dollars for the last 50 years in order to buy oil. That is the deal that we struck. Almost 90% of all the oil sold across the globe is purchased in dollars because of OPEC. So what has OPEC done? OPEC has struck a military agreement with Russia. We talked about that the day we left Afghanistan. There was no coincidence in that announcement. Saudi Arabia has joined the BRICS nations. Saudi Arabia has told the world that they will, at Davos 3 weeks ago, they're open to taking other currencies for oil. Saudi Arabia and all 13 BRICS OPEC producing countries are on the Belt Road Initiative. And when you look at this cohesion of the Shanghai Cooperation Organization, the Belt Road Initiative, the Eurasian Economic Union, and the BRICS, you're talking 85% of human population who ain't going green. We are, right? Not only are we going green, destroying their way of life, but we're destroying the value of the dollar, and the treasuries that they hold are getting eviscerated. So why would they want anything to do with a country that is destroying what their way of life, what makes them wealthy, that is going green away from this and is destroying the value of the world reserve currency through inflation, and the bonds in circulation are paying a real return that is less than the inflation rate, negative real return. There is no incentive whatsoever for them to stay with us. So think about it this way. All this does is incentivize them to speed up the process, for them to stand on a stage with all of the OPEC producing countries on the Belt Road and say, hey, thanks for the memories. We are being protected now by the BRICS nations, by Russia, by China, by India, by Brazil, by all of the 60 plus countries that are joining the BRICS, the 150 countries on the Belt Road Initiative, 60% of global population on the Shanghai Cooperation Organization and the Eurasian Economic Union. And they're going to say thanks, but goodbye. And when everyone dumps the dollars like that, bang, they all come flooding home. A tsunami of inflation hits our shores, and it's going to happen because they look at the brain dead monetary policy of this country and they say, what the hell do we want dollars for? It's losing money. We're going to sell our oil to them as they inflate away the dollars. No way. And as rates go higher, the treasuries get destroyed. No way. We're out. We're going to go, and with the with the Shanghai Cooperation Organization has already said they're going to issue a gold-backed settlement currency for the entire Eurasian continent. Or the BRICS have told us they're issuing a commodity-backed currency. And what did they do to gold in 2019? They reclassified it, they being the Bank of International Settlements, as the world's only other tier 1 reserve asset. Is this why the central banks bought more gold in 2022 than in any year since 1967, the second most on record? You bet your ass it is. Is this why all of the exchanges are being drained? The London Metals Exchange and the COMEX? You bet your ass it is. And when they make that switch, and that flood of dollars hits our shore, interest rates will go parabolic. And when interest rates go parabolic, to compensate for the hyperinflation, what's going to happen to the balance sheets of the banks? What's going to happen to the 401ks and to the pensions and all of these things that are inversely correlated, that being stocks, bonds, and real estate, to a rise in interest rates, a real rise in interest rates, not this pussyfooting around of 25 and 50 basis points, but 5 or 10 or 15%. Everything blows up. And what we are doing globally and here domestically is making the rest of the world say, what the hell is wrong with that country? It's time for a change. Yeah. And it's happening. And I need people to understand that this is what fear looks like. And you know, I don't sell gold and silver basis of fear, never have, ever, until recently, because for the first time in my career, I'm frightened. And it's as if they are purposely destroying this country by weaponizing the dollar, by kicking Russia out of SWIFT, by sanctioning them. The rest of the world is cohesive now in opposition to the Western hypocrisy, in the Western hegemony, in fighting against these sanctions, wondering, are we next? If we don't fall in line with what they're doing, they're going to do it to us too. So not only is that pushing everyone this way, but the dumb brain dead decisions that we're making, like sending $114 billion to the Ukraine when $5 billion to build a wall to protect our southern border and stop kids from dying from fentanyl is too much. Paying money for the Ukrainian pensions for their government when there's a $1.75 trillion pension shortfall in this country, by literally backstopping these banks, which is the dumbest thing they could have ever done. They're going to have to destroy the value of the dollar. And all of these countries that were already thinking, the 60 countries that are lined up to join BRICS, the 150 on the Belt and Road Initiative, all of these countries that comprise almost 90% of all of human population are saying, goodbye, US, time for a change. And it will be the backing of commodities to a distributed ledger technology system like the Chinese digital yuan, which has been working for 4 years, which will be the glue that makes all this work. People say, someone I respect a lot, I'm not going to mention his name, he'll say, well, the euro didn't work because all of these countries have different feelings about one another and they have different history. In the news the other day, it just came out that China has brokered a deal between Saudi Arabia and Iran, who have had knives at each other's throats for decades. And they're putting embassies in each other's countries. Why? My enemy's enemy is my friend, right? China's brokering a deal. These countries are finding mutually beneficial agreements, and they're finding a middle ground. They're mending fences, and this is their one shot, and they know it, at breaking free from the Western hegemony. And they know it. And if they stop bitching at each other and become a strong, cohesive unit, not only militarily and with their gross domestic product, but with a currency that is tied to commodities, like Zoltan Pozar said, it is going to be Bretton Woods III, a system dominated by transparency and commodities. We are at our weakest right now. And God help us if China and Japan dump the $2 trillion in treasuries. Jim Willey, who I respect a lot, he's a little bit out there, but I respect him a lot, and he's smart as hell. He said Japan is thinking of joining BRICS. If Japan joins BRICS and dumps their $1 trillion in treasuries, I mean, it's going to become the Great Depression in this country overnight. Or the Great Depression meets the printing press, hyperstagflation. So what we are seeing here is not something that should be taken lightly. It isn't. This is something that people need to wake the hell up and realize they are purposely, it just seems that by weaponizing the dollar and doing this shit, they are purposely making the world say, what is going on with the United States? It's time for a change. So that's what's going on. And I've never been more concerned in my career. And when the fear that as people are calling me with is oozing all over me. And it's hard to not be this fired up when I hear this stuff. And when I'm talking to people who are almost in tears, please let me. And then I get a call from a financial advisor yesterday who says, places a $200,000 order for a client and calls me and says, we went to send the wire. The bank asked 47 million questions and finally wouldn't send it. Wouldn't send the wire. They didn't like the answer.
I didn't even think about that.
It's getting real, people. It's getting real. Gold and silver are not an investment. It's wealth, period. Yeah. And I want to say one last thing, and then I'll shut up. I don't mean to monopolize, but here's the deal. The price is being betrayed by the drawdown, by the biggest money in the world off of the exchanges. They are using price suppression of the COMEX market with tremendous leverage in their margin accounts to be able to suppress and short the price and gobble all the physical up at suppressed prices, because the public only looks at price. I live in a very nice golf community in Southern Florida. I play golf with a bunch of financial advisors, and they're smart. And all they ever say is, why isn't gold and silver going up? They only look at the price. What do I always say to you? Price is the ultimate tool of misdirection. That's what's happening. All right, I'm done. I'm off my soapbox. Let's talk.
Man, I just got to say,